Let's welcome in our global business editor Udayan Mukherjee and get started on those queries. We hope you're sending in your query on the number on the screen. Our first query, we've got Anand from Nainital, and he has a query on Huhtamaki, India. Let's listen in.
Hi, this is Anand Sharma here from Nainital. I have a query for Huhtamaki India Limited. I am holding 500 shares of it and expect reasonable returns. And I can hold it for 8 to 10 years. So my question is, do you think it can deliver 18 to 20% returns in 8 to 10 years? And if not, are there better options? Please suggest. Thank you.
Well, Huhtamaki is not a bad company. I mean, as you know, having invested in it for the long term, it's a flexible packaging maker, and it has good pedigree because it's now owned by a Finnish parent, Huhtamaki. 18 to 20% stock price growth over 10 years is not an easy task. Though Huhtamaki is growing at 18-20% in terms of revenues. So it's a strong player in flexible packaging. The problem with Huhtamaki right now is, and that's the reason the stock has corrected quite significantly of late. I mean, actually it halved from 320 to 150 and has bounced back to 190, 200 again. So it had a really gut-wrenching period over the last few months. And partly the reason is because of the kind of results it's been declaring. As I said, it's declaring 18-20% revenue growth, but it's still making losses for the last 3 quarters running. That is quite unusual for a company with reasonable growth. And that's because its margins have collapsed. Because of the rise in the price of crude and raw materials for Huhtamaki, basically operating margins have collapsed to close to 1.5%, wafer thin. And therefore the company is just not able to report profits for the last 9 months. And the stock is taking a beating. So it still looks like, given its client profile, a reasonable long-term play, but I would be a bit cautious in the near term, because if crude continues to remain this high, then raw material pressures will ensure that Huhtamaki makes no money at all, and therefore the stock will languish. So till there is greater clarity on where the crude cycle is headed, given geopolitical concerns, and where these raw material issues are going to eventually pan out for Huhtamaki, I think in the near term the stock may struggle to perform.
Srinivasa Prasanna has also written in from Bengaluru. Let's listen into this query.
Good evening, sir. I am Srinivasa Prasanna from Bangalore. Currently, I am holding 200 shares of Jubilant Ingravia. Can I hold it for next 2 to 3 years?
Well, Jubilant Ingravia is a reasonable player in the specialty chemicals and life sciences space. And it's one of those players which is basically trying to cash in on the China Plus One opportunity in chemicals. The company's stated ambition is to grow revenues or double revenues every 5 years. So, and top line growth is, to be fair to the company, quite reasonable. Is it the best company in the chemical space, specialty chemical space? Probably not. And I say that because there are a couple of risks which one has to highlight with Jubilant Ingravia, but though the management is quite good, is that nearly half of the company's revenues are in the life sciences space, not specialty chemicals. And in the life sciences space, one of the key raw materials, acetic acid, is going through a fairly significant churn in terms of prices, great volatility in prices. And you know, since this contributes such a significant share of Jubilant Ingravia's profits, the life sciences segment, I think the company is exposed to the kind of risks that I just highlighted for Huhtamaki as well, raw materials eating into the margins. So I'm a little concerned about margins for Jubilant Ingravia in the foreseeable future. So fingers crossed on that. And while I will not suggest specific names, I think if you do your homework in the specialty chemical space, you may just come up with at least 3 or 4 names which have better long-term prospects compared to Jubilant Ingravia. So fingers crossed.
Long-term definitely seems to be the key word here. Now, Ankit Srivastava has written in from Mumbai, and we've also got a lot of queries coming in today from the broader markets. And this one again is for a period of 3 to 5 years. Listen in.
I want to ask Udayan sir about advanced enzyme technology stock. I bought it at rupees 300 levels. Can it grow multifold in next 3 to 5 years? Thank you.
You know, potentially yes, Ankit, because it's a great space, the enzymes space, because the enzymes market globally is a $10 billion market. It's huge. And advanced enzymes is still a very small player. The problem is that for a space that large and for a company which has got such a tiny market share in the enzyme space, it is just not able to grow that fast. And that is baffling for most investors because, you get into the stock thinking such a big opportunity ahead, the global enzyme space. If one can manufacture in India and sell overseas, the company should become potentially a very large company. Yet it's struggling to grow at more than 10-11% over the last many years. And the average growth in revenues for Advanced is just about 10%. That is not acceptable because it's such a small company. For a $10 billion market, Advanced Enzymes top line is something closer to $100 million. So it is really a minuscule player in the global enzyme space. And that's, I think, is the central problem with Advanced Enzymes. The opportunity is there, but the growth is just not strong. And as with most chemical companies, I think it also suffers from some input cost pressures which are squeezing the bottom line. So top line growth anemic, bottom line pressures are there. So I don't know what the answer to your question could be because the opportunity exists, but whether this is a management which can really cash in on this opportunity, they have not been able to prove that over the last 3 or 4 years.
Bharat Patel from Mumbai has also a query regarding Polyplex. Let's find out what price he bought in to that share and what his query is.
Hi Udayan, I am avid follower of yours since very early days. I have 400 shares of Polyplex Corporation at 125. I am holding since 2008. Now price is around 2,700. What should I do? I intend to hold it for next 5 years. Your views, please.
Well, you're a serious long-term investor, and far be it from me to recommend a switch out for a stock which you've made so much money in. Because not only has the stock gone up from your price of 180 to 2,700 over the last 15 years, even in the last year, the stock has been a three-bagger. It's trebled from its price. So Polyplex has delivered very good returns for shareholders over a long period of time. So the issue is that over the next year and a half, there might be some kind of sluggishness. A, because of the price performance being so strong already, and B, because in the BOPET market, the polyester films market, which is where Polyplex is a giant, and I say giant because it is one of the global leaders in polyester films with manufacturing facilities across 5 countries. It's a global scale player. It's not one of those tiny chemical companies or packaging companies which are seeking to become big. It is already a very large player. But in the BOPET market, in the polyester films market, periodically it's a cyclical kind of a play. Sometimes supply will come in globally, and in years when there is a lot of supply, the prices tend to slacken and therefore the margins come under pressure. I think we are going through that kind of a phase in BOPET where there is a lot of global supply which is kicking in and prices may remain slightly subdued for a period of 18 to 24 months. If that is the case, then Polyplex will not be able to grow its profits very significantly. But it's not an expensive stock. It's just early to mid-teens kind of a PE multiple. The issue is of oversupply for the moment. And therefore, if you're willing to look through it as a long-term investor, as you seem to be, then I think in the longer term, you should still be fine with Polyplex. Just don't expect the kind of returns that you've made over the last 1 year in the next 12 months or so.
All right. That's all we could pack into this edition. Udayan, thanks so much for taking out the time and answering all of our viewer queries. If you have some queries, do send them in to the number on your screen. We'll take a select few every week.
If you like the video, do like, comment, share and subscribe.